Going into the actuarial field can feel like embarking on a safari where insurance is the most visible path, but hidden just beyond the trees are other unique career opportunities waiting to be discovered. Right now, there are so many people wanting to become actuaries, but there are not enough entry-level actuarial positions for all of them. So you might decide to go a more non-traditional route where it's not all about insurance. Let's look at just 3 of your many options available, starting with ERM. Hey explorers, keep your eyes peeled for 3 zebras hidden in today's video. Look closely because they are out there, just like the exciting opportunities in non-insurance actuarial positions. You might have to look closely to find them, but they are there. Once you find them, let me know where they are down below in the comments. Actuaries can work in enterprise risk management, or ERM, and this is a really interesting area to get into because there are so many different types of companies and fields that you can actually apply this knowledge to. The possibilities are literally endless. In these types of roles, actuaries are responsible for managing and assessing risk in all sorts of different fields that are non-insurance related. For example, what if a luxury spa in Florida was heavily dependent on tourism in order to make a good profit each year? And then what if several years of bad and extreme storms have hit Florida, so tourism really suffers because people are hesitant to actually book trips to Florida? Well, what would happen in this situation? Would the company have to fold? Would there be a significant financial impact to the company? Probably. What would that impact be? What could the company do to combat those potential scenarios? What other scenarios might come up? These are all things that actuaries could think of, and they do a really good job of it in this sort of an industry.
So in this particular one, they want someone that is going to be implementing ERM strategies and operations to ensure adherence to the ERM framework. They're also going to want someone to enhance the risk function by leveraging emerging technologies and data analytics. So perfect for someone in the actuarial field. However, nowhere in this job post does it say that they want someone with an actuarial science background. So the fact that you have maybe an ERM fellowship or maybe a CR designation would really be able to prove that you have the skills that they need, even though they're not actually looking for an actuary in this position.
Now, this specific position is not actuarial. However, with risk-related experience and maybe a CRA designation or an ERM fellowship designation, you'd be highly qualified for this type of role. If you're really interested in the stock market and investment portfolios, then an actuarial career in investments and asset management may be in the cards for you. When you think of actuaries, insurance comes to mind. But there are tons of actuaries that are also involved with things like creating and monitoring different types of financial investments, like annuities, for example. An annuity is a stream of payments that come at regular intervals. It could be every year, maybe every month, maybe every week. And usually they are triggered by some sort of event happening. Now, this event could be maybe the passing of a parent or a spouse, so that this income that comes in on a regular basis could be used to support the people that that person is no longer able to provide for. Or it could start at a certain age, for example, maybe retirement age, because that person's income has been significantly reduced or maybe completely eliminated once they retired, and now the annuity is able to provide some income for them to use as spending money. Now, an annuity could be set to be received for a certain number of years, or maybe until the person receiving the money passes on. There are a lot of different factors. Either way, actuaries do need to be involved because there's a lot of uncertainty around when this annuity will start, if it will even start, and how long it will last. Absolutely, actuaries have to be involved with annuities because who else wants to deal with all the uncertainty around if, when, and how long? It's basically like the actuary's version of a mystery novel. By the way, if you are a member of the Actuary Accelerator community, go check out Actuarial Excel Project number 1 in the Rising Candidate phase, because that one will teach you all about annuities, and it will give you the opportunity to do some work that actuaries may do that is related to annuities.
Okay, so I actually have 2 positions I want to show you that involve investments and asset management that I think would be good for someone in the actuarial field as well. So in this one particularly, you are responsible for establishing and managing hedging program at miiight, which actually is an insurance company, but this would be more on the investment side of their business. With this one, you're analyzing proposals, you're analyzing large data sets using R and Python, which are skills that you'd probably have as someone in the actuarial field. And this specific one wants someone that has finance and capital markets experience. So again, if you are someone that's really interested in this investment stuff and you have a lot of knowledge in that area, and you also bring in the risk knowledge from your actuarial degree, then this might be a perfect combination for you. This one here is a junior trader position for Black Arrow Capital, and they're looking for someone with a strong interest in both trading and equity analysis. So again, actuary is really good with analysis, and if you do have that really strong background in financial markets, then this type of a role would be perfect for you. Specifically, it says monitor and interpret market trends to inform trading decisions, assess risk factors and apply risk management techniques. And nowhere in these qualifications does it say that you have to have an actuarial degree. However, like I've been saying, your actuarial background will give you some really good knowledge of risk assessment, which is something that they are looking for in this position.
Take note that with these non-insurance types of jobs, your job title may not have the word actuary or actuarial in it, but neither does CEO or CFO or CRO. But these are still all people that are very well respected and make a really good salary. It doesn't mean that you're not an actuary, it just means that you've chosen to take your career in a more non-traditional direction, and it may actually be the way you prefer to go. If you're someone that enjoys computers, networks, technology in general, then you might find your place in cybersecurity. Cybersecurity is becoming a growing field, especially as there's more transactions and interactions happening online. But there's always the risk of data breaches and cyber attacks, and for some companies, these can have significant financial impacts both in the short term and the long term. In the short term, money needs to go towards fixing the situation, lost revenue due to downtime, customers canceling services due to immediate fear and uncertainty. And in the longer term, customers may become hesitant to purchase from them, employees may disagree with decisions the company makes after the cyber event, causing them to quit, and the reputation of the company may be tarnished for years and years because of it. Actuaries may be able to develop models that would predict the financial impact of different cyber events. They could create various different scenarios that would help the companies realize what types of things could happen and what the impact of those events would be, and also come up with strategies and ways to prevent these types of events. In the scenarios where those events do happen, actuaries could also be helpful in coming up with mitigation techniques, so reducing the amount of financial impact that these events cause for the company.
Okay, so this is an example of a potential position that an actuary could hold that involves cybersecurity. So it's actually for an energy company, and in this position, you're responsible for delivering support in a team setting and contributing to the systematic approach to cyber risk management. So if you are someone that's very technological and you also have that risk management background, then this is going to be a really good position for you because you're highly qualified in two very important areas that are needed for this type of a role. This specific position does have qualifications of bachelor's degree. It also asks for some specific licenses, but I do believe that it would be really hard to find someone with all the exact specific qualifications that they're looking for. So if you can bring in your risk management background from an actuarial perspective, and if you have good technological background, then I believe you'd be a good fit for this type of role and have a high chance of getting into something like this.
You might think that since the different types of fields and areas that we've talked about today don't require an actuarial designation specifically, that maybe you'd make less than what you'd make in a traditional actuarial role in insurance. But the opposite may actually be true. Because you'll have very specialized knowledge of risk management through your actuarial designation and your exams, plus you'll probably have a really good understanding of insurance, you are actually someone that's really hard to find for these types of roles, but you have an amazing ability to do these types of roles. So because of that, you may find that there is actually potential for you to earn more than you would in a traditional actuarial role. That's not to say that you still can't make great money in an actuarial insurance role. You can, and depending on when you get into the career, you could have a career that makes you millions over time. Now, if you had to choose just one of these alternative career options for actuaries, which one would it be? Or are you someone that really wants to stick to the traditional insurance-related actuarial roles? I'm really curious to know your thoughts on this, so let me know down below in the comments. And if you have questions about anything I've talked about in today's video, or anything actuarial really, let me know. Ask those questions down in the comments. I'm going to try to answer as many of them as I possibly can.